Aloha, everybody. Outside of VGGL intraday and PTBI intraday, which were extremely exciting, the rest of the overall market was pretty dull. But both of these stocks were on the watch list. VGGL was an earnings winner, gapping up $3. Big run early in the day. And then PTBI started to break out late in the day, and it ran all the way up to 980 from around our when we started to look at it was around 8:30, so not too shabby at all today. But as for the market overall, we're still range bound. We were down only 0.20% today on the Nasdaq. On the S&P 500, we were down 0.51%, but neither one are throwing up a distribution day because volume was lower than the session before. The Russell 2000, big reversal off its intraday high, but it still managed to finish up 0.07. But overall, range bound market, not much more to go through. Volume was below average, so you can't get too bearish on that. I never ever suggest shorting a dull market, and this market is the epitome of dull right now. The one good news today is that we had zero sell signals at all, zero on an end of day basis and zero intraday. But we do have some more long positions. So we have two bank stock long positions, FCB and CSBK. Both of these guys are CanSlim quality. Both have very little risk to the potential reward that can come about from both of these stocks. So both are excellent long positions. FCB is pretty thin overall, but it's not that thin. It still trades over 100,000 shares a day. CSBK is a little bit more thin too, but it also trades over 100,000 shares per day. So once again, not too thin to be risky because some small bank stocks are. FCB was a CanSlim quality stock, and it was confirmed in the IPO scan, and just the mere fact that it's a recent IPO, that makes it more of an interest to me as a long position. So even though it is a generic IPO scan, it's a big deal because IPOs can move up more than most old time stocks just due to the lack of previous price information that we have. You don't know how to out of price these stocks can get. So FCB, 2.5% of the account capital into this position. Final sell stop to know that we are wrong. It's going to be at 26.55, so we barely risk over 1.5%. CSBK, 2.5% position. I would even use the low a day from 3 days ago, and if you do that, we risk about a little over 2.5%. But what I would do, probably what I'm going to do, almost definitely, is one half of the position, 2.5% of the account capital. Half of that position sell stop will be below 1375 at 1374, and the final half will be below 1359 at 1358. So that will be one level, and the low a day of today will be the other level on CSBK and FCB. Also, other flag stocks, Charles Schwab is breaking out to a new high on strong volume, confirmed in other scans. CLCD is a recent IPO that looks coiled as can be for a major breakout. This one running 30 to 40% in a day would not shock me. And then speculative stock that I'm not passing on because earnings are on the 20th, and BOP is really going the wrong way overall. So with earnings ahead, I kind of want everything. But look at all the pocket pivot point buy signals in STV, China Digital TV Holdings, since the beginning of the year. Very, very impressive. But BOP's going the wrong way, so I'm going to pass on that speculative play and instead take a 1% position in this speculative play, Glu Mobile. Recent earnings winner. It's consolidating nicely on lower volume. Max Green BOP the entire way. It's starting to move higher today on heavier volume. So GLUU is going to be a new long position, only 1% of the account capital because it is a speculative stock. It's under $10, and even though there is some sales growth, earnings growth is kind of spotty. But by 2016, earnings are going to really start picking up for this company. And then also going to add a 1% hedge. DRV, Direxion Daily Real Estate Bear, 3-time share. Interest rates are starting to rise. You can look at TBT and you can see that we've moved from 39 to 49 in a very short amount of time. And you can look at TLT and actually see what it's doing, the 20-plus year Treasury bond fund going in the wrong way. So this tells me this recent action, and with the highs being all the way back in January, interest rates are going to start rising. I don't think it'll be this year, but the market is now looking ahead as it now knows interest rates are not going to stay this much low for this much longer. So with that, the market will have some competition from bonds with higher yields. So we'll see if this uptrend can keep on keeping on. But we got a lot of good stocks. Like I said, we have no sells, and we keep getting long signals. But DRV is a real estate bear market by 3 times play. So what I'm going to do is 1%, since it was not confirmed in my ETF scan. Or hold on, maybe it was and I just skipped it. Let's just see. I don't think it was, but let's just go look. Nope, it sure wasn't. Okay, so 1% position. The first sell stop can be below 23.92, and the second sell stop can be below 23.13. But a lot of the real estate stocks are looking pretty weak, and it makes sense to start a hedge here based on how bullish this one looks. And if you look at the oscillators, stochastics overall uptrending, RSI overall uptrending, TSV, MACD overall uptrending, so it makes sense. If we're wrong, we risk only 1% of our account capital, and at the most, I mean, if it comes to a really, really bad fill, we risk 10% on the position, so it is a bit of a riskier play, but I want to go ahead and throw up a hedge on the real estate stocks.